Hi traders, welcome to another episode of the FXP weekly analysis. We've been really busy running workshops and giving out, seminars to the audience and crowds, people who are interested in learning about trading and investment, right? So just yesterday we went to NUS Invest where they organized this FX101 Workshop, an annual workshop, and what was great is that I really enjoyed myself sharing with the crowd, and what we did was we talked about the fundamentals of trading strategies as well as the principles of money management, right? So since I shared with them a little bit about structured trading as part of the strategy that we adopt over here, I thought, in this video itself, I would like to go through more in depth today, right? In how we use this strategy and how you can then see how we analyze, and if it fits you, all right, you can adopt this as well. Right, so I would like to use this example on the New Zealand Canadian to show you how we analyze and adopt this strategy in the market. Alright, so let's start off with the daily time frame. Alright, if you look at this chart, what you are seeing is that this is clearly a downtrend. Right, previously it was going up and then it became a very clear downtrend over here. Alright, and what you see is that price is consolidating, and recently price broke above your previous structure. Alright, so what we want to do is we want to go down to the lower time frame, the 4 hour. Alright, and take a look over here. Alright, what you see is that price is starting to form a higher high and higher low. Alright, so what we are interested at is a 4-point structure. Alright, in structured trading, we want to identify a minimum of 4 points. Alright, 1, 2, 3, 4. So what we are looking for is a higher high and a higher low. So if you look at this, right, if this is our starting point, we clearly can label this as 1. Alright, so our second point is when price move higher, right, and this would be then our second point. And when price hits the second point, normally it should retrace at least a minimum of 38.2. And then in this case, you see price after hitting this level, it retraces back over here. So that's where we identified our point 3. Right, and the rules for point 4 is that point 4 has to be above your point 2. So it has to break and close above point 2. Right, so you see that the recent price movement has broken and closed above your point 2 structure level. So this is then our point 4. Alright, once you have identified a 1, 2, 3, 4 structure, alright, in this case a higher high and higher low, then we can clearly say that currently price is already in an uptrend sentiment. And once we have established this sentiment, what we are looking for is just the direction in which we are interested, which is for this case a buy or a long position. Right, but we won't be buying at the point 4 because what we'll be expecting with a high chance and probability is that price will naturally retrace towards back your previous structure, in this case point 2 level. Alright, let me drop a horizontal line. Alright, in this area there's a high probability, we believe, alright, and by chance, alright, high chance that price will retrace towards this level and continue its predominant trend, which is in this case an uptrend. Right, so what we'll be expecting is this, alright, price to come down, alright, have a very strong reaction over at the previous structure over here, and we are expecting that price will continue up, alright, in its predominant trend, which is in the uptrend. Right, what we like to do over here is we also like to use a Fibonacci confluence. So what we do is we pull a Fibonacci retracement tool, and what you can see is that this level 2 structure coincides with a 38.2 retracement. Alright, in this case it gives us an additional alignment and confidence that when price really comes back to this 38.2 level, we'll be looking for a buy position. Alright, so if I show it to you, if price comes down, this is where we'll be buying. Alright, our stops will be just below 618. Our first target will naturally be at a previous high, alright, and if you look at this, the risk to reward is decent as well. And if you want to aim for the second target, we also use the Fibonacci tool, alright. This one, if you've been following us for some time, you'll be familiar with this, how we set the targets, alright. And the second target will be at the 127. Alright, the stops will be the same around 618. The second target will be at 127. Alright, and the risk to reward is close to 2.5. Alright, so this is something that in this video I'd love to spend some time sharing with you, how to identify the overall sentiment, whether currently is an uptrend or downtrend, right? And how we do that is basically using the 1, 2, 3, 4 structure. Alright, and once we have this 1, 2, 3, 4 structure points established, what we're looking for is for price to retrace back to your previous 2 level, right? And looking for a buy or short depending on the predominant trend. Alright, in this case is an uptrend. Okay, so the next 2 pairs that I want to go through with you on in this video is the New Zealand CHF. This is not a structure setup, but more on the harmonic pattern. Alright, so if you go on to the daily time frame, right, it's still in the downtrend, right? But if you look at this is currently price is currently in a consolidation phase. So what we do when price is in a range bound consolidation area is that the harmonic patterns are normally established and found when markets are doing this, alright, when they are in range. So if you do and you pull up a Fibonacci tool, right, what you see is that from X to A, there's a B point retracement of 618. And in this case, right, it is a potential godly pattern forming. Right, and for godly, right, we like to look at the 127 extension of your AB. Right, and in this case, this godly has been completed. Right, just before market close last week. Right, it just hit the 127. Right, and if you look for confluences around this region, what you see is that there is some minor structure level as well. Right, support and resistance. Right, not a very strong one, but still a decent one. Right, so what we're expecting is that price would react from this level when market open in the morning, Monday morning. Right, we are expecting that it will bounce up. Right, so as usual, if you are familiar, how we do is that our entry will be around here. Alright, our stops will be slightly below your X point. Right, and target we'll be using Fibonacci as well. 382 as our first target, and our second target will be at the 618. Alright, if you compare the risk to reward ratio, all the trades that we take, it's always more than 1:1. Alright, so this is one potential setup for the New Zealand Swiss franc. The pattern has been completed. So what you want to do is you need to monitor how this price react when the Monday market opens up. Right, the last one that we're gonna go through in this video is the New Zealand pound New Zealand. If you look at the daily time frame, it's in an uptrend and price is currently in a consolidation phase. Alright, once again, when you are in a consolidation phase, that's where all the patterns, the harmonic patterns are forming. Right, and if you pull in your Fibonacci tool, what you see is your X to A, right, and a retracement to 618. And once again, with a 618 retracement, that's where your potential godly pattern is forming. And in this case, it's a 127. Right, and this example as well, the setup has been completed. Right, this godly pattern has been completed. And if you look for confluences, right, let's drop a horizontal line in this level. We have structure level in the past as well. Right, once again, this adds confidence to our trade. Right, and price has been reacted to this level. Right, so what you need to wait for is how the market opens in the morning and how price reacts to it. Right, so our entries and stops will be same. Right, in this case, because it's a very deep godly, right, your stops is just below X. Alright, with targets using 382 and 618. Right, so you can see how the risk to reward ratio is really decent for this trade, right? Purely because this is a very deep godly. Move that. Right, so the second target will be at the 618. Right, let me just delete that. So you see risk to reward, second target gives you 3.28 and the first target gives you 1.88. Alright, very decent setup. Alright, so since we have a good example for this, right, look at this, the overall trend is still up and price is currently in a consolidation phase, and the pattern that we've identified is a bullish pattern. Right, so since we have this example, what I want to share, right, in this video is something more as well in terms of trade management. All right, since we are in an uptrend overall and we've established a bullish pattern with an entry, all right. So what we would like to do is I will share with you how you can manage this trade and maximize your potential reward. Meaning we will be removing our hard target. That means we won't have a very fixed TP level, but what we'll be doing is a trailing stop. Right. So let me delete all this. What I mean by trailing stop is that, for example, all right, if price break, as in not breaks, but react to this level and bounce up, all right. Let's assume it bounce up, right? What we'll be doing is that we'll be using a Fibonacci retracement, all right, assuming that the first bounce up is over here. All right, let's assume lower. Right, what we'll be doing is that if price comes up and it does a little retracement, we'll be moving our stops, all right, from the initial low at X. All right, we'll be moving our stops up towards just below the 618 of this retracement. All right, and what we'll be expecting is that price will continue its uptrend and continue higher. And how we move our stops and trail it is that we'll again take a retracement from this to this, all right, and we'll move our stops accordingly, right? So just below the 618, and should price does a minor retracement, all right, and then it continues bouncing up, what we'll be doing is once again we'll be using a retracement tool, all right, and keep shifting our stops. All right, so there are a few ways you can do it. One is based on this structure, you can move your stops just below the previous structure, all right, over here in this case, or you can use a Fibonacci retracement and shift it according to the 618 retracement. Right, there are a few ways that you can do in terms of this, but just to share with you, some ideas of which you can do trade management, because this trade itself, this pattern is in line with the overall uptrend. Alright, so that's it for this video. I hope you gain some insights into how we do the market analysis and certain strategies that we adopt over here. If you like and enjoy this video, right, if you benefit from it, I really hope that you could support us and encourage us in this by liking and subscribing to our channel. Alright, what I would like to share with you is also we'll be running a lot of workshops, alright, a series of free workshops. The next one is this coming Tuesday in the evening in Singapore. Right, so if you are free and if you are interested to learn more about harmonics, we'll be talking about harmonics for that workshop. So if you are really interested into harmonics and would like to find out more how to use harmonic to trade the market, right, subscribe to the event, to the workshop itself. Alright, it's free. Alright, you can find the link below this video itself. Other than that, I hope you have a great week ahead, and I'll talk to you soon.